Hi, this is Randy Finney with the right side of the chart, and this is a early session update for Monday, December 9th, 2024. It's 11:30 a.m. Eastern Time, so we're exactly 1 hour into the trading day, and I've got a lot of catching up to do. Obviously, as I mentioned, I just returned back from vacation late Saturday night. Spent some of the day on Saturday catching up the charts and just trickling out updates on existing trades, the markets, everything I can get to. Hopefully, we'll have be pretty much caught up by the end of the day. Let's just dive into it here. Here's how I'm going to do this. I'm going to start out with the equity markets, NVDA and the semis, all related, and then I'll roll into whatever's relevant here. I'm trying to get these in the most important order, if you will. I typically start most of the videos out covering the equity market. So let me just say we're still where we left off before I left town, over a week ago. It's been, gosh, almost 2 weeks, just before Thanksgiving. And I've been waiting and still am and maintain that this will be a significant sell signal if and when this trend line off the August 5th lows, that's a major reaction low, is taken out. So that's the same one we've been watching. They bought it here, they bought it here, they bought it here, they bought it there, and that's about where I left town. And so just another bounce off that trend line. Technically, nothing's changed. We made a new, but a marginal new high. That's been the MO with the Nasdaq 100 series of marginal new highs. But the most important thing, and I know this is a pretty bit of a busy board. Again, that purple line, that's why it's color coded that way. That's a very significant technical level if one taken out. And these are your divergence lines. So we've been diverging. And as I very often say, divergence is not a sell signal. It is a condition that's indicative that a trend change is likely, but not guaranteed. So what you do is you take the divergences, whether they're bullish divergences after something's been zigzagging down, or if they're negative or bearish divergence when we've been going up. Then you wait for a sell signal. And again, this will be the most significant sell signal. And I do have kind of a condition on that I threw out before, that I've been talking about for weeks, if not months now, NVIDIA. All the better to see Apple and Microsoft and Amazon break key support levels as well. But to me, the two that kind of put me all in short on the indexes will be a breakdown in QQQ and NVIDIA, whether they come concurrently or one after the other. But until then, we're in an uptrend with zero sell signals on this 60-minute or daily chart. And that's it. So we're waiting for that. Now, shorter term, you can zoom in. A little bit of an uptrend line. It's not super well defined. But we're just starting to crack it today. And based on the scope of these divergences, by the way, when I say the scope of the divergences, this is just the, again, these lines start here from the 60-minute chart divergence. Somebody asked while I was out on vacation, do we still have divergence on QQQ? I know this is a busy board. Let me try to find a clean board. There's a clean board. So the divergences we have all the way from the 60-minute chart out to the monthly chart and all the significant time frames in between. So that's what I call the charts being stacked. Again, sometimes you don't have divergence on the long-term charts, just the short-term charts, be it short, bullish or bearish divergence. And that usually leads for just counter trend moves. But when you have divergences running all the way from the 60 out to the daily, the weekly, and monthly charts as we do now, that is indicative of a primary trend change once you get the sell signals. Now, it's not a single sell signal. Yes, there's that uptrend line again from the August 5th lows. Very significant right here. I just drew it in purple. Been harping on it, obviously for weeks now, if not the last couple months. And again, we need to break it. Then the 200 days, that's also a big level. When we were back here, we had the sell signal on the break of that minor trend line. Called it down to the 200s. We covered, reversed. Covered our shorts, went long there. That is a very, very big level to me, as you can see, as I talk about often. The Nasdaq 100, many big tech stocks, many sectors and indexes behave very well to their 200s, meaning they act as those 200-day moving averages define trends, and it's bearish when the indexes are trading below there. and then bullish when they take it out, as they did right here where I'm circling, and then you back test it. So in a bear trend, you short once it's clearly been taken out, as it was right here. You short rallies back into the 200s. I put them up, the simple in blue and the exponential in red. Sometimes it's one, sometimes it's the other. So collectively, when they're both taken out, right now they're pinched. So you can see we've kind of flattened out. There's not a lot of differential between the two. Now that's a pretty long way down. But again, the way it works is this is sell signal 1. Obviously, there's other levels I'll be covering, other key stocks. I have price support levels. But once that's taken out, that should open the door for another move down. And again, what I'm doing, I'm walking out now. This is a daily chart. I'm going to walk you out to the weekly. And let's see if I have a clean board here. There it is on the weekly chart. Same thing. Here, no, let me draw it for you. There's the big divergences right there. And then all the way out to the monthly. That's typically as far as I go. You can look at an annual chart. And for those of you new to this and technical analysis, what I'm talking about here on the time frames is it's candlestick. Every candlestick on a monthly chart represents 1 month of trading history. And you can see, I've got the histogram up here. It's kind of obscuring things a little bit. Let me see if I can, well, I'll just leave it there for now and zoom in. I think you can make it out. This is the big negative divergence right here on the monthly chart. And there's your big primary uptrend line. This is your secular or cyclical, I should say, cyclical bull market uptrend line. If you could count these as bear markets. You can count COVID as a bear market if you want. The record books put it that way. But to me, a 20% move, that's the old antiquated definition of a bull and bear market. What we've seen in recent years, really recent decades, is a supersizing of moves a la excessive liquidity and market manipulation by the central bank. So, the bull markets are bigger in scope, more powerful, the trends, and the bear markets come and they're usually more powerful as well. So that's it. So that's the big primary uptrend line. And just to come and visit that, you have to drop about 25% from where we are right now. So let me move on a little bit. I don't want to spend too much time on the markets because, again, nothing changes, nothing significant happens until we take out those lines. And based on the current technical posture, that hasn't changed. We're still at, I think we're within 2% of my market top range I laid back out all the way back in late June and have continued to maintain. We're only ever so slightly above it. And that occurred on a week that pretty much counts for nothing for me. That was Thanksgiving week. We printed a candle, little, again, slight close. We're talking about 2% above it. And so that's it. Nothing much has changed for me. Now let's go to NVDA, the king of everything, in my opinion, the king of AI. Nobody's going to argue that. They're the poster child for the AI bubble, and or whatever you want to call AI, whether you want to call it a bubble or not. And let me just get to my main board. This is a daily chart. And again, as I've maintained for a very, very long time, it will be a powerful sell signal if and when this is a primary uptrend line. I don't think it could be better defined if it wanted to be. You have a lot of clean reactions coming back off the October 2022 lows. Big divergence. And again, it's not as if these divergences haven't played out. They're each one. These are, that's the first. It was a small divergent high, played out for a correction. I should just take the numbers away. Another divergent high. We swung that one down from right at the highs, covered to the lows. And because we hit those big 200-day moving averages, the primary uptrend line, we hit it again there. We've been dancing on it. And again, big divergences that indicate to me when this trend line goes, it's going to be a high double-digit drop, and that will take us down to my longer-term price targets I gave you on NVIDIA, and that goes all the way back again to June 26th when I gave you the long-term targets on the market. There they are right there. And so depending on how you draw it, I like the board I just had it on, this trend line right here. So again, replicate that, come off the October lows, catch those January lows, come in, catch the August 5th low right there, and the recent candles, and you can see we are literally on that trend line as I zoom in right now. So let me add this real quick. From my experience, and you can look at the Trader's Almanac and all that, typically a week between Thanksgiving and Christmas, or towards the end of the year, the market drifts higher. It's typically been a positive period. And so if you want to play the odds that way, you say the market's going to go up. I don't trade off the Trader's Almanac. I'll factor it in, but when the charts, I go off the charts. And so if we get these sell signals, and another thing, because of that, this bullish sentiment has reached some extremes recently. We've seen a lot of risk on assets just going crazy, valuations getting high in the technicals. So what I would tell you is, I'd never ever, although I typically lighten up my trades during the week between, at the end of the year, between Thanksgiving and New Year's, because whipsaws are more likely as volumes taper off and people are on vacation, the holidays. But one thing that I will say, and I often say this around this time of year, or any vacation period, July 4th, always be ready for the unexpected. It makes me think, if you're a market historian buff, war buff, you're probably familiar with the Tet Offensive. I think it was 1967 or 68, right around there. Many historians consider that the turning point of the Vietnam conflict. Tet is the Chinese New Year, Chinese Lunar New Year, and so the U.S. troops had their guard down. They figured, okay, all the Viet Cong and VC, NVA regulars are going to be just hanging out, partying, and having a good time. And what happened is they launched the biggest counteroffensive of the war. And again, that was turning point. It was because their guard was down and nobody thought it was going to happen on the U.S. military side, but it did. So all I'm trying to say is, I don't know if it will or not. I can tell you that we are right now in a precarious technical posture. As we were right before I left, we were right on the trend line on QQQ, testing it. NVDA had a test here. It keeps bouncing, and it may bounce again. But if it doesn't, and you get a solid break of this trend line, especially a big red close, and you get it on QQQ, to me, that is a sell signal, and it's what I call a high probability sell signal. Yes, you have to take it with a little bit of a grain of salt. How much is up to you, because whipsaws, as I just said earlier, are more common during the holidays. And just to speak to that, one more thing I'll show you before we get away from NVIDIA. Let me go back to QQQ. If you recall my low volume indicator, if you recall this drop right here in the Nasdaq back into the August lows, which we had a bearish engulfing candle, we had short-term sell signals. I was actually on vacation in Italy at the time, made sure to get it out to you guys that was time to get short NVIDIA and everything else. And we swung that down. That was a 16% drop in QQQ, covered at that morning with impunity at the lows and reversed it. And part of that, leading up to that time, if you recall back then, I was warning of or highlighting my low volume indicator. Let me find the right board. Here we go. And that's this. So my low volume indicator, you can see from these lines, it changes over time, but the way it works is I use a 10. It's just something I came up with many, many years ago, and I find it pretty effective in kind of warning when an extended trend may be coming to an end, similar to divergences, but a completely different thing. There's no divergence used in this. It's just when volumes plummet. And I use the 10-day EMA, the exponential moving average on the volume, because it smooths it out. Because if you look at any one day, last week you had the abbreviated trading session. I think it was a Friday after Thanksgiving. And so those, in Thanksgiving week, and then you're going to see a lot of people taking time off around this time of year. But I can tell you, we've plunged now. And it's usually that first shot across the bow. I've talked about this in recent videos. That was that 17% or so drop, and I highlighted it then at the time. I told you the risk of, I even went so far to say the risk of a market crash or a quick swoon down is elevated. Many in the media called that a market crash, and it was that coupled with the divergences and a lot of things. In other words, similar conditions, but the conditions now are even stronger, setting up for a bigger drop. Why? Well, we hit that first tap and then usually get that correction, then followed by another drop and the red line's the extreme. And you can see where we're at now. I think you can all zoom in. We've plunged down. Nobody's buying stocks. They're going up on fumes. No, short sellers are gone. They've given up. And I'm not being literal, obviously I'm being facetious, but the market's been drifting up on fumes, and that is shown right here. You can't argue volume. The volume's volume. You can see the same thing happen. Here's when we peaked back in 2022. Technically, the Nasdaq peaked in October. The S&P peaked right in the beginning of 2022, and you had the same thing. You had the initial plunge to low volume. You got a correction, pushed up, made another high, hit my extreme level again, and then the top was came in right after that. So there's that. I have put to call ratio extremes that I'm not going to get to in this video. I may cover breadth, and I just had I checked this morning, my Nasdaq, my customized Nasdaq Hindenburg indicator fired. That's an indicator that I didn't create, but I customized it using the Nasdaq. It was created using the NYSE. So that gave me a signal, at least one recently. I just kind of gave it a quick glance today. So that's it, guys. I just wanted to show you conditions are ripe. Even though seasonality says that chances are we go up, the charts tell me that if, and again, I can't overemphasize that if word, if the trend lines on QQQ that I've been highlighting and NVDA are clearly taken out, you could see a very swift rush to the exits, it might leave a lot of traders scratching their heads, or we hold up. And there's also the other possibility they both break down and boom, it's a 1-2 day whipsaw, and then we move back above there. And if that happens, let me just give you my trading plan. You get the sell signals on QQQ and NVIDIA. I told you they'd be big ones for me. And then all of a sudden you ramp back up and you recover those trend lines, then you stop out. It was a false sell signal. And if you clearly recover the lines in both the Nasdaq and NVIDIA, it's one of those holiday whipsaws we see. So it's not the end of the world. You take a small loss and you recognize that that was whipsaw. And then if you turn back around right after that, shortly after that, and they break down again, you can get back in short again. What I'll roll into here in a minute, I'll cover the semis next, is things like Treasury bonds and other ways to do what I like to call indirect hedging. That's what I tend to do more than direct hedging. Again, if you followed me, you've heard me talk about that a lot. And quite often, it's not always, but quite often I'll use treasuries as that indirect hedge. So there's the trend line. This is a busy board. This is the daily chart on QQQ. You can see the uptrend line there as well. So let's move away from that. Quick update on the semis themselves. On NVIDIA, again, to me is the most important of all. This is SOXX, the Phillips Semiconductor Sector Index ETF. And NVIDIA is a big component in here. And you can see that one has broken down, as I highlighted before I left, and it's been back testing. It's still below the trend line, so it's still technically on a sell signal, and you're also below the downtrend line off the highs, and you're close to back testing that. So it would be bullish if you get back above, solidly back above this yellow trend line, and you also take out the downtrend line. I would have a hard time spinning that as anything but near-term bullish. Doesn't mean you can't do it, break out, and then fail. And if it does, then you react. All I can tell you right now is we're in a bearish technical posture. If I turn off all the lines, you can also see that the semis, at least via this, this is the oldest semiconductor sector out there. The PhilX has been around since the 90s. There's other semi ETFs. Some look a little better because they don't have as big a weighting on NVIDIA. But you can see it was in a bull trend here. It was COVID. It was in a bear trend when it took out the 200s. And it was a big drop. It was over before you knew it. If you blinked, you missed it because the central banks hit the nuclear button, and exploded the markets with incredible stimulus. Then you took them out there and you were in a bear trend. And these are big double digits. You can measure them yourself. Then you regain the 200s there and you were in a bull trend. They bought the 200s. They bought the 200s. They bought the 200s. They bought the 200s. Remember, they intraday cut or briefly one day cut it, but we covered there because of many other, the majority of key stocks and sectors and the indexes were at the same time as SOXX dipped slightly below there on the morning of August 5th. There was 101 reasons to cover all shorts and go long, as we posted. And so, you sometimes you'll slice through them because SOXX is volatile. But here you can see we took it out, and we've been trading below there for now a couple weeks. So I just wanted to point that out. And to me, Of the, there are 11 sectors in the S&P 500. The biggest is technology by far, without a close second. And so the semis are a subsector of the tech sector, and they're probably the most important. I like to say they're the canary in the coal mine for the tech sector. So we'll watch that. That's the technical posture. If and when that changes, then my outlook in the market is going to change. It may not be a light switch flip, longer term bearish to longer term bullish, but it might would certainly have some near term bullish implications. Likewise, what you want to see now after back testing, the thing about back testing when you break down is you can continue to back test for a while. You can go up, up when you're back testing a breakdown of an uptrend line, and then up, 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 and then one day you could just shoot above it. So what I like to see, I often say this, I like to see a rejection following a backtest, whether it comes right away, a clear rejection. And you can see right now, not only do I want to see rejection, but you really need to take out about that 209-ish level right there, right? Because that was the breakdown. We hit it. For a couple of weeks, we were dancing on that level. So I'm going to set an alert now. I think I already have one, but there's that. So that's it. That's what the SOXX looks like, which is related to the stock market. And again, NVDA being the big one right now. NVIDIA right on the line. You look at the 60-minute chart right here. There's that uptrend line I gave you back here. A couple targets recently. 1, 2. We bounced off T2. We had a little kickback rally. T3, I can't remember now if it was the trend line or that level. This was from a couple weeks before I left. It might even have been back here on that breakdown there. I think it was. All right, so that's it. Need to take that out. Otherwise, we are in an uptrend. And if you are bullish, then the objective trade to be made is buy a pullback to the trend line with a stop somewhat below. But based on the divergences, the odds, in my opinion, tell me that sooner than later, this trend line is going to break and we're going to have a deeper correction, more so than these little pullbacks here. Since I have so much to cover, and I will do this today, I'm going to do my best, as I've already done, get individual posts. I know a lot of you prefer the screenshotted charts with a couple paragraphs, a line or two of what's going on there. It's quick to look at and reference videos. I understand, especially if you're working or don't have the time to watch them. Take a little bit longer. They're more efficient for me to cover all the things I want to cover, the key things. I will continue to trickle out individual screenshots and updates, but I'm also going to do more of these videos, and I'm going to cover, I definitely want to get to commodities, various commodities, both energy and agricultural commodities. I already got you an update on gold and GDX. Told you I don't have a very strong opinion right now on that, but just gave you levels to watch. VIX, thank God. Didn't want to forget the VIX. VIX is setting up. Let me go to a 60-minute chart. Here we go. The VIX is a hit and run instrument. What I mean by that is it's the farthest thing in the world from a buy and hold, unless you're just shorting, buying and holding, because over time, especially the VIX ETFs or ETNs, if you trade those, they're going to decay. The VIX index itself won't. It has a floor. But the ETFs that track it and the ETNs, they continue to roll futures. They have expenses. And over time, you are guaranteed to lose money, even if you catch some of these explosive up moves. So just know that. It's a hit and run vehicle. So the way I trade the VIX is I align it. I'll trade it on its own charts. All the better. And that's, you don't go too heavy until you get the sell signals on the stock market. And I skipped over SPY, not intentionally. I just wanted to cover QQQ for you today and the semis. They're the most important. It's really a tell onto the S&P 500. The tech heavy QQQ, S&P 500, again, tech's the biggest sector. And it will ultimately determine where the S&P 500 goes. Utilities, REITs, they're in there. They're one of the 2 of the 11 sectors of the S&P 500, but they can go to the moon and back, and it will not move the needle on the S&P compared to, because they're only 2 and 3% weightings, and then the technology is of over 25% weighting of the S&P, and it's about over half of the Nasdaq. So what we're looking at here, guys, this is I'm down to a 60-minute chart. If I neglect to mention it, you can just look up here on this platform, and you can usually see it says hourly there. It also says 1 hour right here. So you can tell what time frame I'm talking about. So we're looking at a 60-minute chart. Back here, we went long, officially a long trade idea. I forget, you can trade the futures. That's what I do. Or those ETFs. I think VIXY is usually a pretty good one to trade. Personally, I don't think you need to trade the leverage VIX ETFs. That's like, it's like putting avgas in your car. Let's say you've got a sports car. Avgas is aviation fuel. It runs much hotter, and then putting double a turbocharger, a supercharger, and then nitrous oxide on there and running it at full. You don't need it. This was a breakout here. We went long right before the breakout. The VIX exploded 372% from there. That was off that divergent low. And again, divergence is not a buy signal, but a breakout above a trend line, or especially the markets. And that was part of what we had at the time. So we went long before the breakout. My confidence was high enough, and then gave you an alternative entry after the breakout. And then here, that was the next time we put in on the 60-minute chart. You can see all my divergence lines below. That was a divergent low followed by a 61% rally. The next there was right there, might have been a sell signal in the equity markets. I can't remember. I'm just showing you the moves off the divergent lows here in the VIX. This was your next divergent low right here, followed by a really ended a little higher there, 55% rally off this divergent low. Oh, it ended right there. That first leg up ended with a divergent high. So it was about 55% to either one. And here's what I want to show you. So we've come full circle. Right now, we have positive divergence on the 60-minute time frame. I'm not super crazy about that downtrend line because I only have 2 reactions. In my book, you need a third confirming reaction. But sometimes you don't have on the VIX a clear, well-defined trend line. I just want to point out you do have positive divergence on the VIX along with the negative divergence on the indexes. So if you get the sell signals on NVDA and QQQ, again, just looking at these previous moves, let's just say if I turn everything off now, you can see this little box. This is the last 2 times the VIX really, well, actually 3, 1, 2, 3, it went up to about this level. So I think it's safe to say, based on the scope of this divergence, we could do that again. If so, that's going to be a move in the VIX of about 78%. And again, that would coincide. And again, that would just be initial targets. You go flip out to the daily after that. And I don't have them set up right now for price targets on the daily. I'd have to do that. And again, if we get the sell signals, I'll be following up on the VIX. And if you want price targets, I will certainly do that. There's VIXY. I haven't marked it up since I've been back from vacation, but there's your divergence right there. Similar trend line right there. And you can see, does a pretty good job. If you don't trade VIX futures, this is really your only other option to directly, or as close to directly trade the VIX. 32% rally off that one. That was also a divergent low that I had marked on my VIX futures there. I just added it there. Gave you a 23% rally. And that's it. So there's the setup, guys. And that was that last one. We had a official trade idea there. Boom. Okay, I gave you an update on Treasuries today, so I won't spend too much more time on that. But remember that Treasuries, they don't always but often move inversely to the market when stock markets correct, or the smartest of smart money thinks there's about to be a correction. They tend to shift money into Treasuries as a flight to safety bid. There's also other factors that determine whether Treasuries go up or down. Inflation reports, interest rates, things like that. Supply and demand, geopolitical risks, worries. But let me just recap what I gave you today. So the update I gave you today, I was pretty clear on that. You have these, with the zero line right there on the PPO delineates bullish and bearish trends. You can see my purple boxes, and basically bearish and short. And then when you break above the, I like to use the signal line, the 9 EMA. That's because it's the last of the 2 to cross. It helps filter out whipsaws. I don't trade off this exclusively. We had an official long trade here based on this bullish falling wedge and this breakout, and we hit our targets there. But you can see this was a bear trend here, and this is what I pointed out today. We're in a bearish trend. The PPO is back testing. Quite often when you back test in a bearish trend like here and here, you get rejected and it keeps the bearish trend going, or you can break above. So that's what I said, where what I can and did tell you in the post today definitively, this is a pretty good resistance level. So, left town bullish and long, the treasuries, told you that would be both either a direct play because of the bullish setup in the charts, or an indirect hedge to any index shorts, because if treasuries kept going up, which they did, that means interest rates are falling, and that's bullish for stocks. It's very simple. Now I want to show you the most important bond. Even though I tend to trade the 30-year for the juice, meaning it's just it's going to move more in percentage terms due to the longer duration of those bonds. The 10-year is the most important bond that the stock market follows. 30-year mortgages are marked to that, and it's closer to what you're going to, your longer-term car loans are marked to, and things like that. And this was a trend line, and this was one of the reasons recently we're bullish and long off that divergent low. And then here I started telling you we'd get most likely a pullback. This is the 10-year Treasury yield. There's the downtrend line right there. We hit it. It took about a week or so of just testing it, and then we pulled back. But we are also on that. You can see here, it's not super well defined, but I do have it's decent. You can see a lot of reactions. This is a line I've had here for a while. It's right at about 42, and that means a 4.2% yield on the 10-year. Just move the decimal over. Tells you what the yield is there. And then you do have also support a little bit below there as well. So the point is that, this was the drop in Treasury and yields that I was expecting. It could continue. That was a rejection off a major downtrend line. But as I stated in that post today, the RR, or risk reward, is not just very favorable anymore. Or another way for me to say it is my confidence isn't as high. So you can either book profits or tighten up stops. Would be what I think is probably the best route right now. And there you can see also on the yields, the same thing here. There's your PPO. Put a line right on the zero line, that dashed line. And you can see here's below the bearish trend. Yields are falling. That's bullish for the stock market. There yields are rising. That was bearish. And right now we're back testing from below. And so that could keep that trend from above. I'm sorry. That could keep that trend intact. We'll see. This is a daily chart right here. So this is kind of a longer term trend. If we see that happen here, yields are going to go up, and the stock market isn't going to like it because it doesn't like rising yields. It may not like it right away, but that's to our advantage. So sometimes I see these turns, going to predict a turn in treasuries, and the stock market may not get the memo. And it's not a one-to-one day thing. It's not a tracking it day to day, tick by tick. But the more you do this, especially if this happens, if we go ahead, we've already checked, we had a pullback off the trend line, which is really all I was looking for. I wasn't looking for a huge trend reversal. So if we can power back up and then break above the trend line, especially above these recent highs, that's going to be bearish for the stock market, because that means rising yields. And then it goes back to, and I'm going to wrap this up here shortly. If you remember earlier in the year on the 10-year bond IEF, the 10-year bond ETF, I gave you these zones. Now I have to jump out to a 2-hour chart. And I gave you a green zone here, which would be bullish for the stock market. That means, remember, this is the 10-year bond price, IEF. So that goes up, yields are dropping. Stock market likes that. And yellow zone starts to take note of those rising yields. It's not freaking out, but it's realizing yields are ticking up. So if this does that, that means yields are going up. But we get into my orange zone, and we did it here a couple times, and both times the stock market corrected. That's what I'm looking for. So that's basically on the 10-year yield I was just looking at. That's that recent spike in yields. This is where the stock market's really going to take note. If we come down here and drop, so I would keep an eye on that over the next few weeks. And if you get that, and we move down in this orange zone, particularly above that recent reaction low. Once those reaction lows are set in place, that's really what the market focuses on, because then that's a breakout, or a breakdown in bonds, a breakout in yields over the previous high. And so if you get this coupled with the breakdown at the same time, QQQ is below that trend line, and NVIDIA is below the trend line that I gave you there, that's a pretty good reason to be short in my opinion. Other than that, right now, QQQ is above the trend line, NVIDIA is on the trend line, and yields are not in the orange zone. So I gave you a short-term sell sign. I think they're going to get there, and that's what I did earlier. I showed you on QQQ. I'll even take it down to 15-minute chart and show you why I'm, got back here today and shorted right here. There's a bearish rising wedge on the 15-minute chart. There's your uptrend line. There's your divergence, and there was a breakdown today, and you can see right here, there's a reaction there. There's a top of a gap there, but this is where I think they're going to backfill this gap. So to me, it's a 1.5% trade. I measured it earlier. Yeah, 1.6% down to that about 517 level. I think we can hit that this week, and probably maybe even today or tomorrow. Be nice. And you can see the volume price histogram too. This is the most of the trades recently have occurred in this area here. And so, even if you're longer term bullish, but you're just looking for a pullback, that's a good place to recycle back into your longs or buy some longs if you want. But remember, if that happens, most likely, if this happens, this is that whole A plus B equals C thing. So that's going to be, like I said, from where we're at, let's just play from where we're at now, another 1% drop. So we drop 1%. What's that going to do to NVIDIA now? NVIDIA is already on the trend line. NVDA, if I can type today. NVIDIA is on the trend line. It's not going to clearly take us below there, but it will take us below because we're starting to crack the trend line right now. As I like to say, if you have to squint, and there's my 60-minute chart. This is probably the cleanest way. You can tighten it up real clean here. Come off that low, get that one, get that one. So pretty much when, if and when QQQ hits that target I just gave you, NVIDIA is going to be on this trend line. Could it bounce? It bounced the last time, but the odds are increasing that the next tag, if not that, the one after that, sooner than later, this is going to break down. So there comes a point where I stop buying pullbacks to trend lines in an uptrend, and I look to hold off and wait for that trend line to break to short instead of buying pullbacks to that support level. I'm going to wrap the video here. I had actually several price alerts today. I'm not going to go over each and every one. This one just happened, I think, right as I was starting the video. It hasn't broken out. My alert hit that line, but SQM, it's a chemical company, foreign. It looks Chilean-based company. Nice, beautiful trend line. So it's a setup. It's coming off a big divergent low. I will sharpen my pencil. I'd probably add another initial target a little closer here. And the 200 days. Look at the 200 days. I just wanted to share this one now in case it runs and before I can get the next video. See the 200-day moving averages that once it took them out here, rejected. So it's my favorite kind of breakout because you have both trend line resistance and the 200 days just above that and a previous reaction high. And I like those when you have multiple resistance levels because some traders only trade off at moving averages. Some use fibs only, some use trend lines, and some use horizontal price support levels. So to me, the more of those levels that get taken out in close proximity, the higher probability a bunch of buyers are going to step in around the same time. So there's that one. So around, it has resistance here around 43. There is a reaction high there in the 200. So if it can clearly take out this whole level, it should run, and you can see potential targets. And this is a stock that isn't going to march to the S&P 500's drumbeat. It is a foreign company, specialty chemicals. I don't think it could be in the S&P 500, but no, it's not. It's not even US-based company. So no, it's one that you could actually, it could go up if the market drops. So I just want to share it because I had that price alert today. Again, needs a little more work before I step in personally. But and then another one I had today was Texas Instruments this morning. It's still also, I look at it when I get the alerts. I don't just automatically short. It took it out briefly at the open, but this is a really nice level. Again, intersecting. There's triple support here on TXN, which of course is a big semiconductor, by the way. You have, as you can see on my chart, an uptrend line. I think that's what triggered the alert today for me. The uptrend line, very good price support. Look how many reactions on that level. You had a brief swoon down to kiss the 200-day moving averages right here. And then other than that, every single pullback, all the major pullbacks here for months since late April, early May, have been contained by that 142-ish level. So that, and then add in you got it, the 200-day moving averages. They bought it on the pullback to the exponential there. You have them both coming in together. So that's a setup. And if you're bullish, and you're bullish on Texas Instruments or the semis, you step in and buy here. It's simple, with a stop somewhat below if it's taken out. However, based on these divergences have been building, got shot across the bow 1, divergent high 1, divergent high 2, divergent high 3, but all one big consecutive bigger divergence that if that level breaks, it's going to be bearish. And if it does this now and then comes down here, and 3 months from now, I'll be telling you exactly what I'm telling you today. You'll have the 200 days, price support, trendline support, and it might be a short setup then. So that's all it is right now, a short setup. It is not an actionable short entry because you are above triple support. In fact, you hit triple support today and successfully bounced. Not very far. It's been hugging these lines for the last 3 trading sessions. So that's it. So you can, right now, really, when you see that, I already punched through there. A break at today's lows would be the trick. In this one, I might even set a sell stop order, which is it's opposite of buy stop. I don't even have to be in front of the computer. If you set a sell stop order to trigger today's low was a 190, 160, then it will automatically short. If you don't have a position on Interactive Brokers, you enter sell stop. It's going to know if you say sell stop 1,000 shares TXN or whatever your number is, it's going to then sell it for you. Now, me personally, I'll look. So I'm going to set an alert today. I'm going to stop the video, set a price alert below today's lows. And if and only if that alert triggers why I see SOXX breaking down or reject some, SOXX already broke down, NVDA and QQQ, there's a reason to add Texas Instruments. Otherwise, it's at support. Alrighty, I'm going to stop it here. And as I said, I will continue to update kind of whatever's most important, for lack of a better word, today. But please, if there's an update on anything I've covered or anything you want, a stock that you see, you want a second opinion, put it in the comment section. I'll do my best to get back to you as soon as possible and give you my opinion on it, if I have an opinion. And if I don't, then I tell you I don't have an opinion. And feel free to bump me on it again, down the road. This has been Randy Finney with Right Side of the Chart. Have a great day.